Ah, yes. It's another down day in the market, but let's be fair. I'm going to continue my theory here, and I'm going to tell you why you should be investing right now. Especially, specifically, if you're a young investor. I want to tell you this right now. This is the time that you should get excited. This is when you should start investing and keep to it. So, I'm going to get into that, why exactly it's time to invest, especially if you're a young investor. You can make a lot of money in these times. Regardless of uncertainty, we can obviously make a lot of money because of this. So we've had such an unprecedented downward movement. I mean, we're talking down over 30% in the past month. I mean, from the overall highs from February, dip over 30% it's massive for such a short period of time. Just a month period, it's massive. And it's very rare to see that. If you look 5 years out on this, we still are positive over a 5-year period, around 12%. So obviously interesting stuff. You have your dips in here, no doubt, but this is an unprecedented type dip. We're talking levels of major recession type dip. So all things considered, this isn't something you can expect regularly, but look at the lifetime of this. So think about in 2009, the financial crisis. If you were to invest during the down times when everyone was afraid, no one knew what was going on. Let's say you didn't catch it at the bottom, but you were close to the bottom. You thought this was the bottom. We're about to hit the bottom. The S&P 500 right around 890. The market since then is up over 158%. Now that's in a 10-year period. That's massive. From that point onward, and that's including this recent dip, over nearly 160% up in that period of 10, really 11 years if you want to be fair. And meanwhile, you accrue just a little bit of a capital depreciation dip there too, because you saw just another little dip here of around another 16%. So if you invest at these levels right now for the S&P 500, it may go down more. I mean, I'm not going to say it's not going to go down more if you invest right now. But here's one thing I need you to know. If you look historically, the stock market typically will have an annualized return of 10% annually. Now, it's not just having your money in the market's going to give you everything. You have to choose good companies. But on average, if you simply just put your money in an index, or in a index fund, frankly, you're going to get a 10% return on average. All things considered, that's 10% after the crazy down times, the recessions. It's still a 10% annualized return because you saw from that 160% increase over an 11-year period, that was through downturn. Through two major downturns, we still saw gains. Pretty big ones too. So you're going to have downward periods, but overall you can average 10% annualized per year. And this is why I want to say young investors need to get involved. So I'm going to pull up a compounding calculator here that I want you to take a look at. So this is going to be going off of a $10,000 deposit. Let's say you put in $10,000 today, right? What can you expect? So we're going to talk about here this interest rate, which is, in our case is going to be our annualized return. And I also added an annualized addition of $1,000. This $1,000 annualized addition is less than $25 a month. This is around $20 a month. If you can't put $20 a month away, you're not doing something right. I just got to be 100% honest. So $1,000 is a very small goal, all things considered. And naturally, you need to make sure you put your compounding at one time per year because, frankly, I mean, that's one annualized return. You can do this, obviously, with dividends and stuff like that. But this is a calculator that does not, I'm not even including any dividends in this at all. Not one bit of dividend. So this is just off capital gain. What can you get in the market? Well, let's take a freaking look, okay? So right here. $10,000 deposit you put in right now. You put in $1,000 extra per year. Here's 1 year of 10% growth. You're ending with $12,100. So really that's a $1,100 gain because you put in that You put in that 1,000. So not too crazy. Let's up these years to 5. What happens in a 5-year period? So you've gone through a downturn. 5 years down the road, that money, you're setting 20 aside. All right, $20 aside per month. It's money you're fine for. 5 years? In 5 years' time, you've got yourself $22,820. $22,820. So this is, well, let's just talk about the gain here. So in 5 years, you've put in $5,000. That means you've made, off this investment, $7,820 just out of a 5-year period. Can we keep increasing this? I think we can. 10 years. So I'm just going to say, let's say you're a 20-year-old. That's when I started investing. So let's say you're 20 years old. So we're going to start here. So right now you're 30 at this point, 10 years. In 10 years, just off a $10,000 investment and $1,000 per year. So you've now made a $13,468 market gain, and you're only putting in $20 per week, that is. I should say $20 per week. Oh, I've lost my mind. My apologies. $80 per month. You have $80 per month. $20 a week, and you've now made just insane amounts of money, right? Insane amounts of money. $23,468 in a 10-year period you've made. You've doubled your money. You've more than doubled your money. Now let's obviously bump this up to 20 years. So you're 40. You're 40 years old. 40 years old now on money that doesn't even impact you. This doesn't hurt you. $1,000 a year doesn't hurt you at this point. $1,000 a year, that's nothing. You now have, your account value is $130,277. So overall, you've put in $20,000 extra dollars from your deposit. So you've made $100,000 on this account over a 20-year period right now. And that's just 10%. Let's be frankly honest. You can make more than 10% in a year. That's a fact. This is just following an index fund. You can get around 10%. But if you're actually stock picking and you're good at it, you can make a lot more than 10% a year. You could get what's up to 15 to 20% a year. So we're just going off this 10% though. But let's say, what am I going to have when I'm 50? You know, I'm 20 years old. What am I going to have when I'm 50? Holy freaking crap. $355,437. That's insane. Hoo-wee. Hoo-wee. That's a lot of money, right? That's a lot of money. But when I retire, how much money am I going to have? So let's say retirement age is 65. Frankly, it's not going to be that way whenever I retire. Obviously, retirement age is going to go up. But let's say it's 65. And I only put $10,000 into this and $80 per month into it. That's right. When I retire, I have $1.5 million. And that's only setting $20 aside per week. $20 aside per week. Are you kidding me? So these are the times to invest. Don't be afraid by market uncertainty. Because if you get invested early, and frankly, you don't need to put that much in, but if you up this amount, if I put $2,000 per year, when I retire, I would have $2 million. And by the way, $2,000, you're sitting right around, it's right around $50 per paycheck, or per week. $50 would be right around $2,300 per week, I think. So let's say you put in $50 per week. You've got $2.5 million freaking dollars when you retire after 45 years. So from age 20 onward, wow, that's insane. That's insane. And if you have lofty goals, I mean, it depends on your financial situation. Right now, I'm at a point where I absolutely can put in $200 per week. I have enough expendable income where I can put $200 per week. So $200 per week every year's, right, $800. So that is, or every month is $800. So we like to see that. So what are we going to do here? So we're going to put in $9,600. Yeah, $9,600. every year. When I retire, I'm going to have $8 freaking million. Now, is that going to be the same case? Am I always going to be, in that boat? Am I going to be able to put in that much money all the time? I hope so. Right now I'm able to, so I plan on increasing my net worth steadily, and I plan on increasing my salary steadily. So frankly, I should be able to, only increase this. So that's just off of $200 a week there. But regardless, this calculator here, and I think you should play around with one of these interest calendars or calculators if you're really interested. Young investors need to get in there, and if you're even 30s, 40s, you need to get in there, because we talk about $2,000 a year. If you're 30 years old, right now. When you retire in 35 years, you're still going to retire nearly a millionaire. That's right, with simply less than $50 a week. Less than $50 a week. You can easily set aside $50 a week. Don't go out to eat, 2 times, and that's equal to your $50. So that's really all I got to say for you today. So I really hope you listen to this, and I hope you enjoy this advice.